Welcome to the market alert for Thursday, 15th of November 2018. So in the daily chart, we've got a bit of indecision here for yesterday. No surprise really when you look at the news yesterday. The main story, of course, is that there's a Brexit deal done. Spoken about this so many times in the alerts that they would get a big reaction. And to be honest with you, I would have thought we'd have had a bigger reaction than this, but there is a lot of smoke and mirrors, I believe, around this deal. Obviously, that's going to be thrashed out. The Brexiteers don't like it. It's going to be very interesting politically for May over the next few days. But whichever way you slice it, as I've said many times before as well, and I'm going to say it again, the European experiment is doomed anyway because of the debt and constant printing of money, although it has been reduced from September by Draghi. For me, it's just a very interesting experiment as the ERM was. It's just lasted a lot longer because they've got the currency and the blanket inflation and interest rates and CPI, which is bizarre really for all of these individual cultures and countries. But that aside, even yesterday and over the last few days, you never see this reported in the mainstream media or mainstream news. Italian banks aid 450 million, 320 million bailout from the Interbank Fund. Italian banks leap aboard a burning ship, and that's from Bloomberg, probably the only mainstream one there. Italian banks have got a major problem, and they keep getting bailed out behind the scenes. And again, you're not being told this in the mainstream that there are problems in Europe. It looks like everything's rosy because the UK are leaving. But like I say, ultimately, whether we go or stay, frankly, I don't care. It's going to be one of those situations where it's a Titanic anyway, and they're just rearranging the deck chairs on the deck. And it's just a matter of time before the debt, which is now 20 trillion, they've been printing 60 billion a month, they've been buying up all sorts of debt throughout Europe to keep it going. And yet, the way it's portrayed is a paragon of commercial and political virtue as far as the political system is concerned. Like I said, I don't really do politics. It sounds like it, but I'm not. I'm just trying to give you both sides of what's going on there. But the most important thing for me is the financials. Without the financials, you haven't got anything. It's like a business or anything else. Without money and a steady and firm base of money and economy, then it just isn't going to work. And you can see that we had it with Greece, and they still got problems as well. And all of this just gets brushed aside by the mainstream media because it's about control of the individuals and not about the money, because they'll keep printing the money to try and keep it afloat. Anyway, that aside, yesterday you can see that we started off with some uncertainty, the market moving lower, trading down to the 200 bar moving average. It then came back. We had a buy signal. Market puts in the obligatory retracement down to the 200 bar moving average, moves higher. Then we've got May's announcement. Then we've got how it was received by the cabinet, and we get the rally. So it's going to be interesting to see when they've gone through the finer detail over the next few days how this market's going to react. News-wise today, retail sales, and that's the same for the US as well at 1:30. Looks to be quite a few news items there. Powell is out again today at 4:30 p.m. as he was yesterday as well. And speaking of the US, yesterday the Dow down again, and we actually see some selling here as well for yesterday. The market stuck at the 200 bar moving average. We spoke about this. It hasn't closed below it convincingly, i.e. down here, but it will certainly be interesting to see how the market is going to hold at these levels. We've still got the prospect of the Santa rally. Are we going to get one? Well, we've got 5 weeks to see whether we have, or 6 weeks. But the market at the moment, through the 76% retracement and yesterday's low, which we drew in there, the market taking this out. So we'll get rid of these two, and we'll get rid of this as well, clean things up a bit and let's have a look what we've got potentially on the upside. The first thing I would be looking at is the high of this selling bar, because that's where there was some weakness in the market. For the upside, or the potential is to close back above the 200 bar moving average as well, and that's what the market's trying to do at the moment on the overnight market. So if we have a look and see what's going on here, you can see there we've got a bit of a trend going at the moment. Got to close above the DP and the 200 bar moving average in the electronic session if prices are to move higher. And then finally, Bitcoin. Wow, we had some movement yesterday. As I've said before, this market's going to need a shakeout, get rid of the weak traders before it can actually move back to the upside. The accumulation phase seems to be panning out. As such, markets tend to break to the downside before they move to the upside when they've been in a bearish market. That way it gets rid of those who can take no more pain, and then they'll move the market to the upside. Doesn't mean to say it's going to go today. You could quite easily get down day and then a retest down at the 5,000 level. That's quite possible. At 586 has been broken, currently at 5514. So that's the Bitcoin news. Some obviously some big selling around yesterday, or manipulation of moving prices to the downside through the futures exchanges to shake out the weak holders there. Okay, that will do it for this one. Let's see how things pan out today. And as ever, thanks for watching. See you in the next one.